After you have defined your investment objective and you have determined your investment timeline and you have assessed your risk appetite, the next thing for you is to choose the right investment that suits this purpose. So it is not enough just to jump into an investment, maybe because of the return on investment that is offering, or maybe because of the security. As important as those are, you need to know what kind of investment suits my objective, my investment objective, my time horizon, my risk appetite. And that's why, if you are yet to watch that video, go back and watch it before you watch this one. So let's now move into it. Now, number one is bonds. So we have all kinds of bonds. We have the sovereign bond, which we call the FGN bonds in Nigeria, and FGN savings bond. That is the sovereign bond. Sovereign bond is issued by the highest government authority in power, so which is the federal government in the case of Nigeria. Then we have the subnational bonds, which has to do with state governments. State governments are permitted to issue bonds, unlike treasury bills. They are not permitted to issue treasury bills, but they are permitted to issue bonds. So state governments can issue bonds. Then we have the corporate bonds issued by corporate organizations. So all those ones are there. So bonds, these are good for instance, FGN savings bond is good for short term because it usually offers between 2 to 3 years, and the long term, which is FGN bonds, where that one is 3 to 50 years, depend on the one that is being offered. So we have different kinds of bonds. If you are yet to watch the video on fixed income investments, this is explained in detail in that video. So let's move ahead to the second type of investment, which is fixed term deposits. Fixed term deposits are offered by financial institutions or fund managers. Now, the one that is offered by banks don't really offer much, which is it's usually between 8 to 10%. Meanwhile, the one offered by fund managers and microfinance banks that are licensed, they are usually between 18 to 24%. So you can go for the one offered by fund managers or licensed microfinance banks. So that is fixed term deposit. Fixed term deposit just means you put your money for a fixed term. You cannot liquidate it until that time when you are specified in the subscription form. And even if you are to liquidate it, it comes with a penalty. Maybe you have to forfeit a part of your interest. So that is fixed term deposits. So fixed term deposit could be 3 months, could be for 5, could be for 6 months, could be for 1 year. So depending on your time horizon. Number 3 is treasury bills. Treasury bills is also issued by government, by the federal government, and it is categorized as one of the safest form of investment. And we usually have the 91-day bill, 182-day bill, then the 364-day bill. We don't have any treasury bill that exceed 1 year. So you need to understand this. So if you are looking for short-term investment, you can go for treasury bills. They are safe and secured. It is one of the fixed income investment. Then the next one is commercial paper. Commercial paper is issued by corporate organizations, public traded firms, or even limited liability companies that are not traded on this floor of the stock exchange. So, but one thing you need to be aware of is the risk that comes with it is a little bit higher than the ones that come with other investments. Why do I say it's a bit higher? It's still moderate compared to other forms of investment that I'll still be mentioning, but you need to know something called the credit rating of the company you are subscribing to their commercial paper. You need to know their credit rating. Is it A plus? Is it B plus? So it is called credit rating. You need to know how credit worthy are they. The past commercial paper they have issued, did they fulfill their promises? Those are the things to look at when subscribing to commercial paper. Commercial paper is usually for investors who want short-term investments, and it's usually for 270 days. low or lower, 270 days or lower than that. So that is commercial paper. Number 5 is mutual funds. Mutual funds are majorly for those who are busy. They don't want to get involved in picking investments one after the other. For instance, you may not know whether you should do bonds, you should do fixed term deposits, you should do treasury bills, or maybe you should do commercial paper. But the moment you invest in mutual funds, it is the professionals who will manage your investment for you. They are the one who knows what to choose. So it is professionally managed. They put funds together from various investors and they manage it on their behalf. So they invest in different kinds of security, different kinds of instruments. So maybe 20% could be for bonds, 30% could be for treasury bills. But before you go into any mutual funds, know the kind of mutual funds you are going for. It could be balanced mutual funds, it could be equity mutual funds, it could be dollar mutual funds. So know the kind of mutual funds you are venturing into before you invest your money. Then number 6 is commodities. When we talk about commodities, we are talking about gold, silver, we are talking about artifacts, we are talking about artwork. Those are commodities. So you can decide to be buying gold and you keep it. For instance, it's even a major thing that some people do now, buying gold bars to keep. Because one thing about gold as well is it appreciates in value. So for this, you may not be getting cash flow, but you may be keeping it as a store of value, because it seldom depreciates, it appreciates most times. And also you need to know the different kinds of commodities and how, for instance, if you are dealing with gold, you need to know what kind of gold are you buying. So if you want to invest maybe for the next 10 years, you can go for commodities and you are saying, okay, let me just buy these gold bars. I'm buying 24 karat gold so that I can keep it and it will appreciate in value. Then number 7 is shares and stocks. Shares and stocks. After the completion of this video, I'm dropping a full course on shares and stocks on this channel, so you can stay tuned. Immediately after this I'm dropping a full video on shares and stocks, which means buying shares of companies, and you have the opportunity to enjoy whether dividend or capital appreciation, or you can even enjoy both depending on the kind of shares you are buying. All this you'll be learning it in that course. And the last but not the least is real estate. I'm sure you must have had real estate, investing in land banking, land flipping, land retailing. You can decide to invest in rental property, buy and sell, buy, refurbish and resell. So many dimensions of real estate. I will also still be coming up with a full course. I already have some. You can check our channel, you can check the playlist on real estate to see some of the courses I've made in the past, but I'm coming with a full course very soon. So that is how to choose the right investments, taking into cognizance your investment objective, your investment timeline, which is your time horizon, and your risk appetite. Let this come into play when you are choosing the right investment that suits you, because the investment that suits you may not be the one that suits your friend or that suits your colleague in the office place. You may just want to invest for short term, you may want to invest for retirement, while the goal, the investment objective of your colleague or of your co-worker or even me, the teacher, may be absolutely different from yours. I hope you understand. After you have chosen your right investments and you have subscribed to it, you have invested your money, the next thing is for you to review your portfolio regularly. Review your portfolio regularly, which means if you are investing for long term, don't just leave it idle. If you are investing in shares and stocks, make sure you are looking at it. Okay, has your dividend be paid? How often does this company pay dividends? These are the things to track. Is your portfolio growing? These are the things you need to look at, because some people are just passive investors. They invest in stocks and shares. They don't even bother whether the company is paying dividend or not, and their dividend are there accumulating with the registrar. So this, don't let it happen to you, because the goal of investing is to grow your money. So you need to review your portfolio regularly in order to ascertain whether your portfolio is growing, whether your money is growing. Number 2 is to adjust your strategy for major life events. A major reason why you need to monitor your investment portfolio is to adjust your strategy for major life events. For instance, a fundamental came out and it's going to affect that company. For instance, I'm talking about shares and stocks now. You may want to adjust your strategy. Maybe you saw that at a point, for instance, fixed income investments was not offering much, so people were not investing in it. But the moment inflation jumped up, and fixed income investment became lucrative, became attractive, many investors had to adjust. Some that were already investing in commodities saw the reason why they should start investing in fixed income instruments. So these are things you need to look at. Maybe, for instance, the moment dollar exchange rate skyrocketed, people started investing in dollar, in pounds. It is when you monitor your investment portfolio that you may need to know, you may have to adjust your strategy. So you are not fixed, you are not rigid with your strategy. You should be what? You should be flexible. Then number 3 is add to your investments regularly. Add to your investments regularly. Add to your investments regularly. It could be monthly, it could be yearly, it could be quarterly, it could be semi-annually. Make sure you add to it regularly, especially if you are investing for retirement. With this, we have come to the end of this short course on investments for beginners. So if you are yet to subscribe to this channel, kindly do by clicking on the subscribe button and click on the notification bell so you can be notified whenever we release a new video. On this channel, we talk about finance, investments, and business. So we meet in our next video. Stay blessed.